Well, is a recent correction in the gold price similar to a mid-cycle correction experienced in the 1970s? Some analysts say current conditions of disinflation, rising real interest rates, and pessimism regarding gold investments mirror those experienced 30 years ago, and they continue to remain bullish about the prospects of the precious metal. But just how realistic is this assessment in the light of tapering and the recent contractions experienced by gold miners? Now, for more on the outlook for gold, I'm joined by Ronald Stoeferle, Earth of In God We Trust. Thank you very much for your time today. Why should we be bullish on gold when so many remain bearish?
I think that's a very good point that you're making. Everybody hates gold at the moment, so it's highly contrarian being bullish on gold again. What we've seen going up to 1900 at the all-time high, most of the big banks, they turned bullish, and nowadays they're extremely bearish. So I think from a contrarian point of view, it's a pretty good buying opportunity. I think with all the tapering talk, I don't really believe it. There will be a slight amount of tapering, 10 to 20 billion, but going forward, I think in 1 year, QE will even have to be way bigger than it is at the moment. So I think we're basically kicking the can further down the road. That's not a healthy policy, and therefore I think you need monetary insurance in the form of gold.
So you think QE is actually going to get bigger in about a year's time than the current $85 billion bond purchases?
Yeah, absolutely. I think even if we taper now, it still will be bigger than QE2. I think we're seeing monetary experiments happen basically all over the world, not only in the US, but also big time in Japan. And nobody really knows how it's going to turn out. We're seeing that the most recent numbers in the US, for example, there's some sort of a time lag, especially for the housing market. I think the numbers that will come out going forward will continue to show that we're probably already on the top of the cycle and we're going down, and therefore I think the Fed will going forward even have to increase quantitative easing.
And is the reasoning then for holding gold is as an inflation hedge because of the amount of liquidity being pushed into the system? Is that why you would see the reasons behind holding gold?
Yeah, basically all the most important central banks are increasing their balance sheets dramatically. People say there's no inflation, but that's not true. We're seeing massive asset price inflation, real estate, arts, wine, luxury goods, and so on. So therefore, I think the next step will probably be consumer price inflation.
Because we haven't seen that yet, have we? I mean,
no.
You look at all the inflation reads that strip out the one-offs, the intangibles like you've just mentioned, and it's not showing up there yet.
No, we haven't yet, because velocity of money is just extremely low, but that's kind of a psychological factor, and it can pick up very fast. And I think when it comes to inflation, it's a monetary thing, but it's also some sort of a political and also psychological thing. And I think with our current policies, we're going to see continued financial repression. That's like the big buzzword. I think we're going to see negative or low real interest rates, and that's the perfect environment for gold.
It's interesting because I think if we were to rewind maybe a month ago, I think a lot of people would be on board. It just seems in the past few weeks, a lot of the data, particularly coming out of the likes of Europe and China, has been quite good, and we've started to see a lot more enthusiasm, if you like, for the outlook of global growth. You've even got the ECB talking about potential moves to rates upward. New Zealand's certainly looking to increase interest rates next year. So is that then going to maybe lessen, I suppose, the chances of a runaway inflation move, which would then lessen the reasoning behind having gold?
I don't think so. Being from Europe, I have to say that the economic numbers, they are slightly better, but we're also having very important elections coming up in Germany. So yeah. I think this will be a major topic, and afterwards we're probably going to see another bailout for Greece. There's going to be a major capital infusion for Portugal, desperately needed. So I think there's going to be really some sort of bad news coming out. And therefore, I think, as I said, monetary insurance makes sense, and it makes sense to hold it in a form that is around for a few thousand years now. And therefore, I continue to be bullish on gold, and as I said, nowadays, that's being quite a contrarian stance.
So what sort of levels would you be looking at for the price of gold?
Well, I started writing about gold in 2006, and it was trading at 550 back then. I said the long-term target is $2,300 US at the end of this cycle. and that's the inflation-adjusted all-time high, and I stick to believe that we're going to see this level. But the recent correction has done a tremendous amount of technical damage. So it will take time, and therefore my 12-month target is $1,480. But as I said, I think as a contrarian investment, it perfectly makes sense now.
Well, it's not too far off. I'll just note that HSBC have just in the past couple of days upgraded their outlook for gold. I think they've got 1,446 end of year target. That's predicated to some degree on the physical demand for gold. Is that something that you see helping to underpin the gold price? They talk in particular the demand for jewellery out of the likes of China and so forth. India, yes, but more so some of the likes of China.
I think during the most recent correction, gold kind of changed from very weak hands to strong hands. If you have a look at the numbers coming out of China from India, the import numbers, it's phenomenal. It's the same in Austria and in Germany as well. People are really buying the physical gold. I think the crash that we have seen was mostly on the paper markets, and just one number, the average trading volume, average daily trading volume for gold futures at the LME is $240 billion. So it's highly liquid, and compared to that, the physical market is pretty insignificant. So I think there's some sort of disruption between the paper market and the physical market going on at the moment.
Right, Ronald Stoeferle, really appreciate you joining us today. Thanks very much.
Thank you.
We're going to head to a break. When we come back, we'll be checking in on markets, so stay with us.